You caught the tail end of the conversation with Grattan. They've bought this huge auto business. He sees the consumer coming back to the party, particularly the middle-end consumer, not necessarily the high-end consumer. Would today's consumer confidence index perhaps suggest that consumers are still a little bit cautious?
I've used the word realism coming through, specifically in the survey, where I think people are very much responding to what they are seeing, experiencing, and looking forward. And we find then that the index, after 4 quarters of essentially moving sideways, has taken a dip at this point in time. In the detail, we find that the question as to how they see the economy going forward, that has actually already been falling. The peak there was reached in the 2nd quarter last year. The second half last year was actually still very good, and own finances were still answered positively. And we had a tick up over Christmas when it came to buying durables, so that is where his business would have had specifically the benefit. But when we now go into the 1st quarter, we find that own finances and a time to buy durables, good time to buy durables, that has ticked lower. And pattern is here developing where one has to, I think, acknowledge that although consumer confidence remains at a high level, cyclically, it is certainly coming off the very high levels that we had last year.
Well, you mentioned remains at a high level cyclically, so I mean, put it into perspective, because falling back to 9, it's been a lot worse in the past, hasn't it?
Oh, absolutely. But then we are in a rising cycle at this point in time, so one would expect positive numbers. It is perhaps just that we, in the first part of the cyclical upswing, went very fast going up. So in a manner of speaking, this is a correction.
To what extent do you think that was perhaps influenced by the Soccer World Cup in the first half of last year, in the build-up to that World Cup?
Certainly, I think the World Cup was for some people positive. But then there were other things that were a negative. I think the 3rd quarter strikes was not positive. But then we again find that the interest rate cuts, presumably for some people, were highly positive. So there were a number of cross currents that were working at cross purposes to each other.
Do you think we're seeing a trend emerging now and we are going to see a further deterioration in consumer confidence going forward, or is it one of those choppy numbers?
No, I think that it's very much a function of what happens next internationally and of course locally as well. The consumer has been subjected to enormous events. The last 2-3 months we have had the events in the Middle East and North Africa. In between we have had these very shocking natural disasters taking place. And the consumer is very much aware of these things and then the consequences. The oil price was steadily rising late last year, then jumped to $100, and then very quickly to $115, $120. The petrol price, diesel prices have been rising. There has been talk over the last couple of weeks of higher interest rates ahead. And the consumer suddenly is being confronted with quite a changed scenario compared to that what was ruling, say, 3 months ago. Also on the food side internationally, the storytelling has been nothing short of intimidating, and that probably will not stay away. So I think a large part of the consumer spectrum is aware that things are changing, that some of that stuff may not be positive for us, oil, food, inflation, interest rates, and that is before we even start analyzing the local domestic situation, politics specifically, and the manner in which that impacts on people. So I would feel that a lot of realism has suddenly been brought to bear, compared to asking, but you know, what's the trend in real income? What is the trend in real spending? Is that sustainable? And I would suggest that it remains sustainable for this moment, depending on what happens internationally to the dimensions that have already been you know, oil, food, inflation, interest rates. What comes next?
Why do you think, particularly among high earners, that they're seeing this realism coming through more so than middle and low income earners?
Well, I think the high income consumers are specifically glued to the television every night and to the internet and to the cell phones. And they are very much aware, I think, of what is happening internationally and how it affects them. They see the pull-through to inflation and interest rates. The indebtedness is still very high. Your question of your earlier guest, the exposure is still there. So under these circumstances, I think there's a heightened sensitivity, especially among them. Having said that, they have achieved very high levels of confidence, especially on their own financial outlook. And although they have eroded this, it still remains at very high levels. So it is early days, and for that reason I like to use the word tempering, moderation, realism coming in, compared to saying we have a definite shift in the outlook. I think it is too early for that.
Because we're not saying it's a negative outlook, we're just saying it's a less positive outlook.
Absolutely.
Why do you think the white consumers, and particularly Afrikaans-speaking consumers, stand out here as well?
They have done it really in every part of the cycle, up and down, for the last couple of years. So they are not out of character at this point in time. Afrikaans-speaking consumers as a group generally have a lesser confidence level as other groups.
We're getting retail sales numbers out on Wednesday. One of the questions you posed to the respondents to the survey is whether now would be a good time to buy durable goods, and that's something that has been deteriorating. Do you think that's going to be something that starts to show through in the retail sales numbers? Because we did have a nice run up towards the end of last year.
The tick up over Christmas was very nice. Now we have a tick down, and on the one hand, on the other hand, I think income is still there, interest rates are still low. The deals are still there in terms of the imported prices to remain attractive. So under these circumstances, it is perhaps a little early to suggest that there's going to be pullback in the actual spending. It is just a warning sign that the confidence level is eroding, and if these tendencies were to continue, then you would expect ultimately a change in actual spending patterns as well.